Welcome back, and continuing with the Philippines economy, as the British bank Standard Chartered expects that the Philippines is to outperform most of the other nations in Asia and enjoy another year of strong economic growth. Well, the Standard Chartered said that the country's gross domestic product could grow by 5.8% this year and 6.1% the next. It also noted that the Philippines' economic growth in the coming years would exceed the country's 10-year average performance of 5.2% posted from 2003 to 2012. On monetary policy, the bank believes that inflation risk will remain moderate, while the Bangko Sentral NG Filipinas may hike key rates only in the fourth quarter as the rate of rise in prices picks up. The Standard Chartered also said that inflation in the Philippines could average at 3.6% this year, but may accelerate, particularly in fourth quarter, due to higher food and energy inflation, consumer spending, and base effects. Even so, it should remain manageable and is unlikely to breach the inflation target. Now, the key upside risk to the bank's forecast is a sudden shock in energy and food prices, which is not the bank's core scenario, while the domestic consumption is likely to remain the biggest growth driver, investment growth to pick up this year. But the bank said that the exports could slow down the growth this year as well. Now, for the growth outlook for exports of goods and services is favorable, as remittances and remains the most significant contributor to the current account surplus.
On to the next story from Cambodia. An industry expert said Cambodia's indirect trade and investment with India are possibly worth almost 5 times more than its direct economic activities, a situation deemed unfavorable to the country. Manish Singhal, Assistant Secretary General of the Federation of Indian Chambers of Commerce and Industry, or FICCI, revealed that indirect activities conducted through a third party could be easily worth around $500 million. Meanwhile, the direct trade and investments between the two countries hit a record $112 million last year, 20% more than 2011. Indirect trade occurs, for example, when Indian products are sent to Cambodia through bases in the region, such as Singapore. This transshipment happens when Cambodian importers cannot pay immediately for certain goods, so they later collect and pay for the goods from middlemen who buy the goods first, Singhal said. While India also largely trades indirectly with countries like Myanmar and Vietnam, Cambodia's ratio of direct versus indirect activities is thought to be unfavorable. Without the middlemen, there is a greater possibility of business growth, as importing costs can drop 8 to 15%. Also, when problems arise, having direct connections with the exporter would enable better solutions. Such indirect activities is one reason why India's indirect trade and investments with Cambodia remain low compared to that with ASEAN, valued currently at about $80 billion. Another reason is people in India lack knowledge about Cambodia and vice versa, which is something he said he's trying to change.
And now we move on to Indonesia, as an alliance of labor unions have denounced worker exploitation in several state-owned enterprises in Indonesia, demanding the government bring an end to such practices and force the companies to comply with the existing labor law. The alliance accused state-owned enterprises of violating the regulations on outsourcing and disbanding unions in an attempt to exploit their workers and enrich corrupt officials within the state enterprises. OPSI Chairman S. Tapiv, spokesperson of the alliance, said the management of big state-owned enterprises had transformed work to their own outsourcing companies for the sake of efficiency or minimizing labor costs. Union members who opposed the practice were ultimately dismissed. Now, Tapiv said that the subsidiary companies have recruited workers and employed them to a contract basis, while the workers were paid below the provincial minimum wages and were not registered with a state-owned insurance company, which is the PT Jamsostek.
Most of the Vietnamese workers employed by the Recon textile company in Malaysia's Nilai Industry Zone have agreed to resume work after a 5-day strike demanding a higher minimum wage. A Vietnam news agency correspondent in Malaysia yesterday reported that the Overseas Labor Management Board of the Vietnam Embassy to Malaysia negotiated with the company about the wages for their Vietnamese workers. Last Friday, over 2,600 of Reckon's migrant workers called a strike to protest the company's failure to implement Malaysia's new monthly minimum wage of 900 ringgit Malaysia, or around $289, which came into force in January. The guest workers were being paid the old minimum wage of 546 ringgit. The company's representatives explained that the salary delay was a result of serious financial losses suffered in the last 2 years. Just last year alone, Recon posted a loss of 141 million ringgits. Until the Malaysia's National Wages Consultative Council makes its decision, Vietnamese staff will continue to receive the lower wage. The employer agreed to pay a bonus of 25 ringgit this month and promised to offer Vietnamese staff extra work to help them improve their income.
And now coming up with an analysis with a special edition with our editor Kuntanong Kantong and a journalist from Bhutan's National Daily. Let's get to know more about Bhutan's economy.
Nidup, you are a business reporter from Bhutan. Can you give us the latest update, on the economic conditions in Bhutan?
Okay. The economy today is going through very rough days, I must say. The government is highly indebted. The debt to GDP ratio has crossed 100%, the first of its kind that has ever happened. And the inflation rate has reached double digit at around 10.9%. So,
but you still enjoy a very high economic growth rate.
Yes, at around 8%. Yes. But the problems the economy is facing today is primarily because Bhutan is an import-driven economy.
Okay.
Most of its
you import more than you export.
Yes, that's what we do. Because that's the only reason why the trade deficit is around 20 billion Yultrum. And in recent times, people's consumption level has really increased because of increase in their income levels. So as people started to consume more, the economy required to import more from India. But since we do not have any rupee earning sectors, any major rupee earning sectors, we had to, the economy had to borrow rupees from India. And because of that, a tremendous pressure has been put on the Indian rupee. And according to recent figures, the rupee borrowings have reached around 20 billion.
So what are some of the immediate remedies, for tackling this deteriorating, I think in your balance of payments?
Yes, as of today, solutions are hard to come by. The central bank has stepped in by freezing loans. Loans have become unavailable from the banks because of that. And the government recently formed a task force to study the current economic situation in the country and suggested a lot of recommendations like prioritizing the agriculture sector, mechanization of the construction sector so that there is a limited import from India in terms of construction materials. And
but also at the same time, how can your country boost the export sector?
Yes.
Do you have a strong export sector?
As of today, no. I would say no, because one of the most important export sector is the hydropower sector. And the government is laying serious emphasis on the hydropower sector. Lots of investment taking place on the hydropower sector. And as of today, around 1,400 megawatt of hydropower is being exported to India. I mean that's what the country generates. And around 80 to 90% of that is sold to India, by which earns a rupee to the economy.
But looking at your country, as a whole, isn't it easy, compared to other countries to manage, because you have a population of only 700,000 people, and the size of your economy is around 1.65 billion. So don't you think that the
Yes,
problems
yes.
can be easily managed?
Yes, very interesting question. Well, that's what people think actually, that it would be very easy to manage a small society. But as far as the economy is concerned, the manufacturing sector is almost non-existent in the country. And because of that reason, we'll end up importing everything from other countries, especially India. So because of an increasing import, and since import from India has to be automatically paid in rupees, a lot of pressure has been put on the rupee. So the economy has to borrow rupee to finance its imports, and the government's liability consequently increases because we borrow more rupees from India.
One way to tackle the trade deficit is to devalue the currency of your country. Right now, from my understanding, the exchange rate is on parity, right?
With the Indian rupee.
With the Indian rupee, one to one.
1 to 1, yeah.
Yeah.
Right,
What's the name of your currency?
The neutrum?
Yeah,
Yes,
the neutrum. Yeah, one
yes.
neutrum per one rupee.
Yes.
Is there any possibility of
Unpegging.
devaluing? Yeah, unpeg it, so that it will. This would make imports more expensive.
Well, there has been a lot of debate centered around this particular issue regarding unpegging the neutrum from the rupee. But at the same time, the economy of Bhutan is still at a very nascent stage. And if we unpeg the neutrum from the rupee, we never know whether the rupee...
The debt level will increase.
Yeah, whether the neutrum would be stronger or weaker. And if we look at the current economic situation, it would definitely be weaker than the rupee. And if we unpeg the neutrum from the rupee, it would mean that our cost of imports from India would increase more.
Expensive, yeah.
It'll be more expensive.
Is there any other ways to attract more foreign direct investment into Bhutan?
We have actually, the government have actually liberalized FDI to some extent. It was quite restrictive until 2010. That was the year when the government revised the foreign direct investment policy. And the government is trying really, really hard to attract foreign investment. One important foreign investment sector is the Bhutan Education City. And they have targeted around 20 billion investment in that particular project.
Thank you very much, Nidu, for a very interesting interview. Thank you.
We are now taking another short break, and we'll be right back with CEO Talk. Kun Natakon Plotty interviewed Kun Tipanawa Watanasap on how to prepare before investing in gold.